Hey YouTube, this is Zach with Achilles Financial. Today I'm going to be talking about how to trade in the upcoming stagnant market. I've seen a lot of information highlighting whether we're going into a bull or a bear market, and I'm more inclined to believe that we're going to be going into an overall stagnant or sideways trading market. My expectation here is that the last 3 months of this calendar year are going to see some upside, but not nearly the same explosion that we've seen for most of this year. You can see that I've got up here as IWM, also known as the iShares Russell 2000 ETF. This is an ETF that is tracking the 2,000 companies that is in the Russell. Many of these are going to be considered small to medium cap companies, and you're going to see them trade kind of across the board. The thing that I would highlight here is you can see that from 2018 at the beginning of the year all the way through 2020, late 2020, it was nearly trading at the exact same level. You can see that on 1/20/22, 2018, the open was $158 per share. In 2020, all the way in November, we don't hit that same level until 11/3. So you're not going to see the potential for some of the monumental gains that you would expect to see from an indices during this point in time. So what do we do? How do we trade in the situation where you're going to have a flat market? Many traders have entered the game over the course of the past 12 to 18 months. You see this type of volatility, this type of explosion in overall stock valuations, and you think that this is how it's always going to be. I want to highlight that even on the 5 and the 10-year chart right here, what is more likely to be expected is the 3% to potentially 5% growth. Although, as you can see in the case of 2015, 2018, 2019, that there were times where you were opening the year higher than the year ended. There's a lot of macroeconomic opportunities or indicators that are going to have an impact on how the stocks are trading. So what I'm going to highlight is over the past 3 years, you can see how the market was trading flat before we saw the crash in 2020. And for the most part, this calendar year, we've also seen trading flat, although now we're on the decline. The question is that expectation going to continue? What I'm looking to do when we're talking about the entirety of these indices is you can see that most ETFs are going to be broken into various buckets. So for Russell ETF, you can see we've got cyclical, defensive, sensitive, and then sub breakouts therein. What I'm going to be looking to do is I do think for most investors, it's appropriate to hold a larger ETF like this that kind of tracks the entire market, pays a dividend, and you can use that to continue to buy more shares. Overall, like we were just looking at, over the past 10 years, the market has gone up despite the fact that there was risk in there as well. You can see here, it actually has gone up nearly 5 times. So since this was in here, it opened at $63.81. And even if you didn't buy until today, you would still be up more than 350%. So there is a lot of value in buying and holding this. What I'm looking to do and encouraging is have half of your position in some of those ETFs, especially if you cannot actively trade. After that, look at some of these sectors and look to play those sectors. Find high conviction companies that will continue to perform well. There's a lot in here that you can expect to see 5 to 10% growth over the course of the next 2 years. During that time, you don't have to hold forever. You can buy in, see that 10% growth, and sell out or continue to move with the different changes. One of the things that has been very, very good this calendar year has been energy. One of the things that I expect to do well going forward will be energy. That being said, I'm looking to buy companies that are not trading at crazy high valuations, and oftentimes I'm probably going to be looking at different funds that contain oil holdings because I'm bullish on oil over the next 12 to 18 months. What we're seeking to do is to utilize sector-based investing as what we can do to beat the market. Now, whether or not we're actually going to beat the market remains to be seen. But I'm confident that when you're trading in a sideways market, there are going to be sectors that outperform. Over the course of the last year, that was by and large tech. There also was a significant amount of growth in EV companies. There was a lot of growth in gambling companies. By investing in semiconductor industry, by investing in gambling stock companies, we were able to do very, very well for ourselves over the course of the past 18 months. What we're having to do looking forward is there is the expectation that this explosive growth may not continue. So if we look at the year-to-date chart, we've largely been trading in the range of the 210 all the way up to the 230. If we expect that to be the case, how can we catch the companies at the 210 range that are going up, and how can we sell them and catch the other companies that maybe are still increasing but not necessarily going to be declining at the same rate? At the end of the day, I'm looking to buy and hold companies that I have a high conviction in, but I still plan on selling them after they've hit the threshold which I'm looking for. So there are markets that will trade sideways like this. What we're looking for is the sectors that are going to outperform during that timeline. Going forward through the end of this year, I have high convictions in two different types of sectors that I've previously mentioned. I think we're going to continue to see high performance from energy stocks, whether that is energy storage like battery companies like STEM Inc., which I am very bullish on, or whether that is commodities type of companies like oil, where the energy platform there is going to be oil prices, specifically WTI, and looking at leverage funds like Gush. I'm also going to be looking at online gambling companies such as DraftKings or Genius Sports, because I believe long-term in both of those companies. And I think that the resurgence of football gambling this fall that we've seen so far is going to bode very well for the stocks. So those are some of the sectors I'm looking to perform very strongly through the remainder of this year, but there are a lot of them out there, and I think that you're going to see a lot of back and forth, push and pull, and it'll be interesting to see where we finish the year. But that's what I'm expecting through the remainder of this year, is this back and forth trading sideways motion that you see here. So if you find this type of content helpful, and if you'd like to see more of this type of trading advice or my opinion, feel free to leave a like down below and subscribe. Just keep in mind that I am by no means a financial advisor. I'm just some guy on YouTube. So if you want to be a part of the conversation, feel free to join the Discord in the description down below. And if you find this content helpful, please leave a like and subscribe. Thanks. Talk to you later.